Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, December 23rd, and this is the weekly market update. Before we get started, I just want to wish everyone on the video and podcast listeners that I hope that you have a very happy and Merry Christmas. This has been a tremendous year of growth. Every year, the subscribers to the video channel and to the newsletter continue to grow. So I'm very grateful for that. You know, I'm not a super duper marketing genius. I don't go out there and super market this, as some people have asked me to do. I just do my thing, and I think that I'm really grateful for the support that we have. I mean, we've had folks here that have been with me since the start, and I really appreciate that. So I just wanted to say thank you for that. I'm very grateful and humbled that you come here every week. I mean, it's kind of makes me chuckle a little bit in a good way. You know, if I'm like, don't put a video out, or it's late sometimes because, you know, I'm just a one-man band here. Sometimes that happens. You know, people are sending me DMs or making comments, you know. So you know, where's the video, what's going on? So that I appreciate that people think enough of my views, or at least my um, delivery, or the information that I bring, that they find it that valuable. That's I try not to be too prideful, but I do. I am grateful for that support and for that trust. Okay, speaking of that, the Substack transition's going fairly well. It seems to be working. I've still got other things to do. I moved if you were a subscriber to the free emails I used to send out every week, I'm doing that online now on the Substack. There's a free section. I post things there that are free for everyone to look at. I'll be doing that more often. I'll be using that methodology. If it's too much, you know, when you subscribe to the Substack as the free portion, or even as a subscriber, you're going to get like these up every time I put something up there. You're going to get an email. But I think you can opt out of that if you choose, if it's too much or you don't find it's valuable to you. So I'm not going to spam people just for the sake of doing it. I'm just going to try to, you know, do the, like we were before, the free email. And then if something comes up during the week that's I think is relevant, I'll send it out. I may start doing the thing like I sent out maybe a couple weeks ago, where, you know, I listen to a ton of podcasts and read a bunch of stuff that people put out. And so the best of the best type thing, where I send out an email, or might make it part of the weekly free email, where it's got, you know, some podcasts or videos, or some research I've read that I think that other folks might find relevant or enjoy. So again, we'll just continue doing that. We're starting to you know, grow on Substack, so I'm grateful for that, and we'll just see how it goes. So looking forward to closing out this year and getting into 2024. Okay, the disclaimer: anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you personalized financial advice. Anything that you hear or see on here today is for informational purposes only. Please do your own due diligence. It's your money. It's your responsibility. Okay, so wanted to show this. This is a U.S. leading economic indicators index. It's the Conference Board U.S. leading economic indicators. I believe now they're down for 20 months in a row. And what I wanted to point out is they've done a pretty good job of, as they fall, showing, you know, we're in recessions. Here's the zero mark. So when they fall below zero, or even when you're seeing the beginning of the downturn, you know that you're heading for a recession. You will note that sometimes, I mean, when you plunge well below zero is really when you see the recessions, right? There are some times where the leading indicators come down, just kiss the zero, and then rebound off it. That's happened a few times. So you kind of need to really wait for it to break through to really understand. But in the past, I read another article somebody wrote this week. It typically has taken about 5 or 6 months of falling LEIs for people, or for us to enter recession, typically. And now we're 20 months in, and so you have to wonder, is the indicator broken? Is there something wrong? I think we've talked about this before. Something isn't the same as in previous recessions. We're coming out of the pandemic, a couple years out now, recovering from that. The amount of stimulus, the amount of free money that was put into the economy, I think that really kind of has really held off this recession, even though we are seeing weakness in different sectors of the economy. Employment is still hanging in there fairly well. Although if you look at other indicators besides just the headline jobless rate, you'll see things like in the paycheck survey. That's one that I follow. That does a small business. Paychex is a company that does payroll services for smaller businesses, and so their actual employment is down, year over year, like almost 1%. So it just depends, I think, what you look at. I think, again, there's a certain amount of unease. There's a certain amount of feeling that something's not right. You know what I mean? A gut feeling. So I don't get the sense that we're in this boom time. Now, one of the people that I like to listen to, just because he's been on the other side of this and he makes a compelling argument, is a guy named Jim Bianco. I didn't link to any of his stuff, but he's very prolific on Twitter. He gets interviewed quite a bit, and he's made the case that we're not going to have a recession, nor are we going to have a soft landing. He thinks that the economy will kind of continue the way it is. What he does say, though, is that the market's not really prepared for that. The market has as a base case that we're in a soft landing. The Fed has paused and will pivot and have a certain amount of interest rate cuts next year because of the soft landing we're getting ready to have, supposedly. But the problem is we don't really, the soft landing thing's kind of very opaque and can be stretched, right? Because there's no real definition of what a soft landing is. So it can be anything it wants to be for whoever is, saying that. So I would follow Jim Bianco on Twitter. He's really good. He's really a good economist. He's a good, he makes good cases. He's very articulate if you get to listen to any of his interviews. So if you want to know, another case, but I think what he's saying also is what I found interesting. I'm not saying he's hedging his bets, but he did say this. He said, because the market is priced perfectly, because the market is overvalued. I mean, on historical precedent. So it's kind of like in this perfect zone that it has to hit, right? That we have to have this little soft landing and we have to see all these rate cuts next year and it's off to the races, right? So the market's priced that in. But, my scenario is I believe that the business case has not been, or the business cycle has not been abrogated, and that we're going to have, a recession next year. I don't know if it'll be a hard landing. I think it has a possibility of being a hard landing, a severe recession, let's call it that. But it's unable to know this at this point. And so the market isn't pricing that in. It's also not pricing in a continued, growth with inflation reaccelerating, which is kind of something that Jim Bianco says is, in his view, is a possibility. So neither one of those are priced in. What's priced in, and perfectly priced in right now, is we're going to have this soft landing. The narrative, we're going to have a mild recession or a soft landing, whatever that means. And then the Fed's going to cut rates and everything's going to be wonderful. Well, if you go back and look at history, those same arguments have been made before other recessions. Now this chart here, if you look at the past, going back to the 60s even, this shows that we should already be in a pretty severe recession. So something isn't right. And I think, what it is not a lot of folks, not really, and myself included, swing and a miss on this one, right? I went down swinging on this, thinking we were having the recession this year. But just the amount of money that was created and put into the economy by the Federal Reserve and by the federal government really, I think, pulled demand forward and really kind of kept us from going into recession. So we'll see what happens. But like I said, I like to play the probabilities, and I don't think, I go back to, history. So here's an example I'm talking about. This is another guy I follow on Twitter. He's pretty good. Updated indicators flashing recession signal, deepest yield curve inversion in 40 years, declining LEIs, year-over-year contraction in US M2, tightening bank lending standards, year-over-year contraction in bank credit, year-over contraction in gross domestic income. Collectively, no false signals in 100 years. So, I think that we are going to have this recession. I mean, I just do not think that the business cycle has went away. And when you've raised rates and contracted, I mean, this economy runs on liquidity and runs on credit, right? And if you're contracting all of those things, you're contracting money supply, you're tightening standards, contraction and bank credit. I just don't see what the catalyst is for the economy to perform well going forward. But again, like I said, employment seems to be holding in. That's like the last leg of the stool. And if employment holds in, then retail sales are going to be there. And that's the narrative seems to be that's going to be sufficient to propel us forward. I just don't think it just really seems imbalanced to me. So we'll see. I mean, this is like, holding a really good hand in poker. Yes, you could still lose the hand, but, again, these signals have not been false in 100 years. So where am I going to bet my money? I'm going to go with what the percentages say is the correct way to view it. And that's from the historical perspective that collectively these indicators indicate an upcoming recession, which will lead inevitably, I believe, in the mid 2024 or late 2024 to rate cuts. What you have to understand or look at also is the Fed doesn't just cut incrementally; they raise incrementally. But when they decide to finally cut, it's because something has broken or it's really things have fallen off a cliff, and so they start cutting very rapidly. And they're going to cut 3, 4, 5 percentage points. We could very easily be down to 3% on the Fed funds, 2%, eventually ending up, if the recession's bad enough, back down to the zero bound again with full QE. And in that type of scenario, gold rips, commodities rip. And I think if you look at and we'll get into some of that later on in this presentation, I think a lot of those things, assets classes that are going to benefit from that are already starting to set up and start sending signals that they're getting ready to move. So it may be just reading it into it. I got to make sure, we check our biases, but, I was thinking the same things in emerging markets. There's many emerging markets. I have in my own personal portfolio, a lot of emerging market stocks in different economies, and they're all doing well. I mean, if you want to look at Mexico, if you want to look at some of these other places, what's happening, I think Brazil is now recovering nicely. The market's up, the stocks in the portfolio are doing well. And there's other opportunities, right? And you have to be selective. But I think that's something that we got on before a lot of other folks, and I think that's going to run for years, in my opinion. When these emerging markets tend to outperform the U.S., it's not for a quarter or two. It's typically for a multi-year period. So Steve Blumenthal, CMG, I get his emails. I've brought him up before. It might be worthwhile subscribing to his work. He sends out this free email every week. So I got some of the stuff from him out of his presentation this week. Steve Blumenthal, CMG, look it up. You can subscribe, and he sends out a weekly data set, which is really good, with some good things. But anyways, one of the things that he had this week was a quote from Sir John Templeton, who's one of the guys that I like to follow, one of my heroes, investing heroes, along with Munger and several others. But Mr. Templeton's dad, he was famous for starting a lot of the international investing trend way back in the 60s and 70s. Anyways, here's a quote. It says, "The four most expensive words in the English language are 'this time it's different.'" And so we have to be careful, right, saying that it's different this time, because going back to what I showed you before, when you collectively have a bunch of indicators that have not been wrong, if you take them, combined in 100 years, you have to pay attention to that. Now, it's very possible, that we have abrogated the business cycle, but I doubt it. And so Mr. Blumenthal points out, there have been 14 recessions since 1950. 3 of them were soft and 11 were hard. Today, everyone is betting on soft. And then he goes on to say, valuation levels have improved but are still too high. Periods of high valuations have typically been followed by periods of low annualized returns, whereas periods of low valuations have typically been followed by periods of high annualized returns. There's a reason why Warren Buffett is sitting on so much cash. And we've talked about this before. Mean reversion, okay, overvaluation versus undervaluation. I like to sell overvaluation and buy undervaluation. I think there's opportunities all over the world, and it's not hard for the average guy or gal listening to this presentation that you can't take advantage of that. And so asset classes that typically perform well a year or two in a row, they typically don't continue on like that, multi-years. There are some exceptions, but it's the same thing when something's gone down 2 or 3 years. I had been buying recently, well, over the last couple months, even for this bond rally, in my cash account, I had moved out on duration, just out of the T-bills a little bit, and bought, some TLT, because did it really make sense that, 2 year, we were going to have 3 years in a row of treasuries being negative? I don't know, not just because of the fact that eventually the liquidity would return back to the market. Okay. And, people that are running like, I listened to one presentation, I forget the guy's name, but he was on Meb Faber. I'll try to find it and put it in the weekly. But he was talking about the whales coming back in the treasury market. Who are that? Pension funds, right? Insurance companies, things like that, that have they have actuarial tables and they have to achieve a certain return. And so when you saw treasuries above 5%, I mean, longer term treasuries, yeah, they're going to shift out of stocks and go, bring, billions and billions of dollars and lock those yields in. Okay. And so I think that's what's been happening a little bit. So anyway, you got to look at these things. And this is why I like that book that I had that I used to send out, ebook, basically Bob Farrell's 10 rules for investing. You can look it up online, not just my book. It's all over the internet, his rules for investing, and read through it with examples and kind of see how that kind of applies to the current status. I mean, this is a guy that was in the market for 50 years. This is market wisdom, and I'll be talking about one of those coming up. But anyway, Charlie Munger said that basically their success was extreme patience coupled with decisiveness. So you sit and wait for that fat pitch, and then when you see the pitch fat, you swing on it. And I haven't seen a lot of fat pitches lately. We're in the middle of some of those playing out, i.e. uranium, i.e. offshore oil and gas services. But I think gold next year is going to perform, and I'm just impressed about how hated and unloved it is. It hasn't seen a bull market in many years, and I just think that circumstances are going to come together next year to really be tailwinds for a gold. Gold's already making all-time highs in various currencies, and it's even doing well in the U.S. And I think it's going to break out next year, especially as we have pointed out in the past. As I point out that for months now, we've been in a net central bank easing around the world. That's just accelerating. What I'm tracking is more and more banks cut rates, more and more liquidity comes in. Things are going to shift to hard assets, i.e., and I think gold's going to be the beneficiary, especially when the United States Fed is eventually going to have to cut rates and reliquefy the system. So pointing out that the overvaluation and what usually happens, this is one of Bob Farrell's, this is Bob Farrell investing rule number 5. Public buys the most at the top and the least at the bottom. And so this is a chart. This is the percentage of U.S. households owning stocks. It's at a very high level. I don't know, this only goes back to 89, but over the last 30 something years, we're at the highest percentage. So they've got all the schlubs in, they've got all the shoe clerks in, because, hey, we're in a new era. It's AI. Buy NVIDIA at 25 or 30, whatever it is. I don't even know how overvalued they are because I don't pay attention to that. I remember Scott McNulty's letter to shareholders at Sun Microsystems when Sun Microsystems stock was selling at 10 times sales. Okay. And he was just explaining, or some crazy valuation. I remember the exact, was basically, you should look that up. I've put it out there. I've put links to it before. Scott McNulty, I think is the guy's name. He was the CEO of Sun Microsystems during the tech wreck, and the stock was so overvalued. He wrote an open letter to the shareholders saying, "Why are you buying this stock? It's overvalued." And eventually, it was one of the showcase stocks everybody wanted to be in, and eventually it crashed. So I'm not saying we're going to have a stock market crash. I'm not saying that Nvidia is not going to take over the world. I'm not saying any of that. I don't know. But what I'm saying is I don't buy overvaluation. Your ability to make money when you buy things when they're overvalued, the forward returns, it's just the data is, without a doubt, your forward returns buying overvalued markets in stocks is not going to be good long term. Can you trade? Yeah. You buy something and it goes up 30%. And you say, "Oh, pat yourself on the back." I mean, but can you keep replicating that over 3, 5, and 10 years? And so these people are just basically pumping money in their 401ks. We have low unemployment. What happens when unemployment goes up? If we, in fact, have a recession, people get laid off. There's no more passive money going into these funds. There's no employer matches. People are having to liquidate, okay, or to take loans or whatever they're going to do to make ends meet, okay? And so they've got where's the new buying kind of coming? You're not going to have 100% of U.S. households owning stocks just because there's people that just don't have any money. And so this should be telling you that, this is what I'm talking about. Now, if you go and look at like hard assets and gold, the public doesn't own any. I mean, yes, there's some, but you get my point, virtually none. And so if you're thinking more longer term, if you're thinking about probabilities, if you're thinking about history, and you want to sell overvaluation, and the markets are overvalued by many, many, like I said, different characteristics, then what's undervalued? And I just have a feeling that gold's it's just out of favor. And it's what strikes me is the opportunity that I see with gold being at all-time highs in many currencies in the U.S. flirting. I think it just hit one and then pulled back, keeps bouncing around. Like I said, once that next liquidity cycle in the U.S., gold's going to break through and be heading higher. But I think people realize that, right? Something's not right, and the gold mining shares have done nothing. So you have to ask yourself, okay, is the gold price correct, or are the mining shares telling you that gold's way overvalued? So it just depends what your view is. But I think there's tremendous opportunity in some of these gold mining stocks, and you get a gold mining junior, a gold mining stock bull market is very similar to what happened in uranium stocks. I think Doug Casey said that because the gold stock universe is so small that he made the quip that it was equivalent to the contents of Hoover Dam trying to go through a garden hose. When he was talking about uranium stocks, he said that it was the equivalent of Hoover Dam trying to go through a drinking straw. So you get the point. There's just not that many. The total market cap for these stocks is not that high. And so if any serious money comes in, you get these tremendous runs where you can, create a lot of wealth, and so there's no certainty, but I just have this feeling that that's going to be a story for next year. And so this is one of the reasons why, right? Central banks keep buying gold. So this is last year, it's divided by quarter, first, second, third, and fourth quarter. Here's 2023. We don't have the 2024 data or quarter 4 data in yet, but you can see that we're going to be, and why is this happening? Well, this is all coinciding with, the U.S. empire and its hijinks around the world. When we confiscate, the bullying that we're doing, you can say that it's, this is what we should be doing. I'm not going to have that discussion. I'm just telling you that you have to, the other parties that are looking at this. Well, if you confiscated Russia's 300 billion because you don't like what they're doing, what are you going to do to my money? Okay. And so, memo received. And so countries have been diversifying away from treasury securities and the US dollar. And, as long, we're at end stage, in my view, of the US empire. And I think that, we're going to be flailing around. I mean, just look at the It kind of reminds me, we're Glass Joe in the Mike Tyson boxing game. Like the first guy that you would face, they called him Glass Joe. I mean, you could anybody turning the game on for the first time can knock the dude out. And that's what we are. Everybody thought that we were kind of like, this big thing. So we've got, this thing, the Ukraine project seems to be failing. Now we're embroiled in this deal in the Middle East. I just saw, I have to do some further research, but we're going to have this coalition of the stupid that was going to go down and deal with the Houthis that were firing missiles at shipping traffic in the Red Sea. And it looks like a lot of the people dropped out because they don't want to subjugate their vessels to being under U.S. command or something, squabbling about that. So we'll have to see how that plays out. But, and then, if you recall, the Pentagon was telling the services last year to prepare for a war with China in 2025. I mean, what planet are these people on? I mean, this is, we don't have any industrial capability. I was just reading another article before I came on here about just the shell production and the squabbling going on in the EU between the various countries about who should produce them where and when. I mean, it's a paper tiger, the whole thing. So, I hate to keep using all the Doug Casey quotes, but when you're running around dropping bombs on Afghanis, running around with RPGs and AK-47s, you can look pretty strong. But now you're messing around with near peer military forces, or in the case of like what he would say about Iran or Russia, now you're hunting big game. And it's not, you're not out shooting rabbits and squirrels with a 22. These are people that can, damage you back. So now I think it looks like we're being exposed, and this is a trend that's in place now. And so one of the things that was in the article is like the United States, it came out from the Institute for the Study of War, which is the neocon Kagan military industrial complex mouthpiece in DC. I mean, they're in a frenzy. We cannot lose this war in Ukraine because it'll embolden Russia and China and all of our adversaries. Yeah. I mean, I'm not saying that, right off the bat, everybody's our enemy, but that's another discussion. But yeah, everybody is watching what's going on. Okay. Everybody's watching what we're doing, supporting, basically the cleansing of the Gaza and the West Bank, whether you agree with it or not. That's how some people view it. A majority of the countries do not like what they're seeing, and they see Israel doing. I mean, my personal opinion is Israel has the right to defend itself. I really don't want to be involved. I have no interest in it. I'm not an Israeli. I'm not Jewish. I'm not an Arab, and I'm not a Palestinian. It has nothing to do with me and my life. But a lot of people look at it and they do have an opinion, and they're watching this. Okay. And they're forming their opinions, okay, and they're seeing that the United States, is where's the diplomacy? Where's the statesmanship? It's just throw bombs at everybody and threaten everybody, and it's kind of reminds me of like, if you go out and hunt like a hippopotamus or a rhino or an elephant and you wound it, well, the thing's not dead yet. It's bleeding out, but it's very dangerous now because you've wounded it. And I think that's kind of what the U.S. is. It's flailing around like a elephant with, it's been shot a couple times, but isn't ready to go down. And it can cause a lot of damage on its way to bleeding out. So this is why I think people in other central banks are buying gold. They want to separate themselves from the empire because they don't want to end up like some of these other countries where they just confiscate and you have no recourse. Gold in your possession, as Ray Dalio says, good insurance against, this type of malfeasance, government and central bank malfeasance. I've talked about that before. The central bank is going to be the recourse for the United States and all of its problems. Can't pay all of these debts. I mean, go look at a chart of the debt. I mean, you have now institutionalized $1 trillion plus deficits every year in the United States. You're going to be at 50 trillion in debt by the end of this decade, quite possibly. Especially when you go into a recession, you're going to be shocked about how big the deficits are as tax revenues plunge and automatic spending goes in place for, economic stabilizers for different programs. And you could have a $3 trillion deficit in the middle of, or more in the middle of a recession. So I think it's going to be, I think, and the resources, the tax revenue doesn't exist. So what will happen? Well, what will happen is what will happen in every dying empire. The government, i.e., the Fed, these institutions, in order to maintain power, in order to try to stay relevant, they're gonna I've said this probably 20 times on different videos since I've been making these videos. When Ron Paul was grilling Alan Greenspan, and Alan Greenspan told Ron Paul, "We have this thing called the printing press. You can look it up on YouTube. We can create the dollars, but I give no guarantee of the value of those created dollars." That's I'm paraphrasing, but that's basically what he said, and that's what's going to happen. And so we'll see. But that's what I think other folks kind of realize too. Now, is that tradable next week or the following week? No, these are longer term trends that I think that are in place that most people don't get, and they're not going to get it. It's very difficult to look at this thing unbiased. Nationalism, unfortunately, is present in just about every country. And what is nationalism? Well, my country's the best because I live here. I mean, that's it in a nutshell. So I just look at things, reality as best I can. And I see, history continuing as it's always continued, where a dominant power or empire has an ascendant period, does the same thing, it gets militarily overstretched and in debt, and then it recedes, and a new empire comes into view. This is continuous human history since you can read about it. Go to your library and start reading. So that's just how it is, because human nature doesn't change. And so our job is to understand these things and then look for the opportunities. So this is from Crescat Capital, Tavi Costa. He puts these charts out. I like them. He gets accused of chart abuse on Twitter. Like, I'm not super big on, you can draw lines on a chart any way you want, but is something happening in the junior gold miners? I mean, here's this huge downtrend for the last 10 years. This is, junior gold stocks have been in basically a bear market for 10 years. Are they ready to come out of the bear market? Well, it looks like we're, at least over the last couple of years, at least kind of side to side here for a longer period. We've had these little small bull markets, cyclical bear markets or bull markets in the longer term. But typically when you have something like this long, multi years, and if this thing does break out, then it's going to go a lot higher. But it remains to be seen. I just think it's interesting. Again, I don't want to be accused of chart abuse, but something to follow. And this is where I think a lot of the circumstances that cause gold stocks to go higher. I mean, you have record. It's not easy to make money in mining. This is part of the problem. People say, well, if gold price is at all-time highs, why are the gold stocks not responding? Because mining sucks as a business. Okay, I've said that before. It's very difficult and it's very expensive, and prices went up, labor costs, all the permitting issues. And so I think we really need a shockingly higher gold price that everybody says, wow, the gold price is up 50, goes to like 3,000 or something. And then people go, wow, I'm going to buy gold stocks. These things must be minting money. And that's really, you need a wow moment like that. Okay. And people just aren't paying attention. And I think that there's ways to play this that, buying junior gold stocks is very, very dangerous, because again, it's like a lot of any other junior mining, which a lot of people are seeing now in uranium stocks. Why buy, with this thing beaten down so much, you got to buy the best. You have the opportunity to buy the best companies, or the companies that have demonstrable success, that are, many of them have cash flow and are paying dividends that are equal to or exceeding what you get in treasuries. And so, that's where you start. There's not really a lot of reason to dip down into the juniors. That's how the progression goes. When the money comes in, it will go into the larger capitalization mining companies, that GDX and all that will start moving, and then it will eventually trickle down into the penny dreadful juniors. You can buy a basket of those and you'll probably do well, but that's how I'm playing this right now. get some decently good companies that have some good managements that have shown that they know what they're doing, they have a plan, and then, one I'm adding this month in the next month in the January newsletter is basically a gold vault in the ground. This company goes out and has shown over time that they've been able to basically increase their mineral resource in the ground, proved and probable consistently. It's basically a company that has the largest, basically one of the largest in-ground gold reserves in the entire mining industry. And so insiders own a lot of the stock. They haven't diluted the company to death. And in previous gold bull markets, this particular stock has been a very good performer. So that's what I'm looking at. Got to point this out, right? I mean, $90 uranium. There was a lot of squawking on Twitter this last week or two about a guy came out and he kind of gave this case about, he said something about the uranium juniors or something, and then the reallocation, I guess something that was going on with URNM and something like that, and some criticism about how they handled. First they're going to put Kazatomprom into the URNJ, which is the junior mining thing. Then they took it out. So, then there was this thing about this tax thing that they had to do at URNM. I don't pay attention to that. I don't care. Okay, uranium's going much higher. It's in a bull market. I don't have to get caught up in that minutia. I've already said a while ago that you have to shift to quality now. You got to get out of the penny dreadfuls. If your company doesn't have a real plan, they don't have any money, and they've been diluting you, you have to, the physical uranium price is up like 80% this year. And yet people email me and go, I don't understand. You keep telling everybody that we're in a uranium bull market, but I've lost money. Okay, well, show me beyond all where the uranium junior that didn't perform touched you. I've explained how this is going to happen. There's going to be more uranium juniors. When we get to the top of this market, there's going to be hundreds more uranium companies, and any of them are not going to be worth buying. Okay, this is what happens during a bull market. Okay, we're out of the stage where you could just buy anything, and now you've got to refine things down to what's possible. What's a legitimate company with a legitimate project? Okay, project is everything. Okay, management is important also. What kind of money do they have? How are if you some people, a guy sent me an email, he's like talking about his junior uranium company that he's married in his mind. That's what happens with a lot of people. They marry these companies. Okay, they know everything about it. They're on the message boards. They know every single thing that's going on. They're constantly scouring for any kind of news. They're talking amongst themselves. They're hyping themselves up. And I don't do that. I'm a generalist investor. I don't. And then why didn't the stock go up? Well, I mean, I say, well, this project that they have that you're telling me about, this thing's never going to get developed. They don't have any money. How does this company develop this into a real mine and cash flow? Because that's ultimately what the point is, right? Unless you're just trading sardines, which is what most of these penny dreadfuls are. And so, I prefer just to buy the physical trust or URNM and just buy on dips. Inevitably there's going to be pullbacks. I've shown this. I don't even waste my time bringing the charts up, showing the previous bull market of some of the stocks that outperformed. It went up 1,000, 2,000%, whatever, and show that during that rise from going up, whatever it was, multi-year, 3 years, whatever, there were like multiple, these stocks, all of them had multiple, 50% plus drawdowns on the way. And if you can't ride through that, if you don't understand that, the better thing to do is, if you're not going to like devote yourself to this and become an expert on these companies and uranium mining, then you're probably just better off just being a generalist. Again, if you just would have bought the physical trust, you've been up, substantially. As a matter of fact, uranium kind of bailed out the entire rest of the portfolio this year. And so I think it continues. And, $90 spot. I mean, this is, or forward curve. This is, so we're going higher. I don't know how much higher, but, that's my recommendation on how to deal with this, play with it, or not play with it, but how to take advantage. So somebody sent me this chart. I thought it was pretty good. This is the percentage renewable energy in the EU. Now, pay attention to something. Let's just look at Sweden, for example. So renewables, renewables, renewables in the EU. But notice now that nuclear is now, as you remember, a few months ago, the EU decided to include nuclear as a renewable, right? Because they weren't ever going to get to their goals by building solar panels and wind. Now they are doing it. I mean, you see in Sweden, for example, wind and, well, they don't have any solar because it's too far north, very little. Doesn't make sense there. But these other things, heat pumps, but you'll notice like in Sweden, there's a lot of biomass and hydro, right, is a large percentage. And now they've included nuclear, but look at all the different countries that have no nuclear at all, okay? Or the percentage of the nuclear is so small. Nuclear is going to be the growth engine. You've seen the shift in the zeitgeist. And I thought this is just a pretty good visual that shows you where we're heading. Well, if the EU continues, I don't think that the EU will continue as a political and economic union. I mean, it's on its way out. It's a dinosaur. It doesn't work. There's too many competing interests. And then after Russia wins this war in Ukraine decisively, which they will, what's the point of having the EU? I mean, people are going to be very aggravated and pissed off that they basically threw, like in Germany. I mean, even the German people that are very docile, nobody likes to be poor, cold, and hungry. And when people have to face the reality that their politicians sold them out to the globalists and allowed the United States to blow up their energy lifeline to Russia. I mean, Germany and Russia should be the greatest of allies. The symbiotic relationship, I mean, and the U.S. wasn't going to allow that to happen. I mean, we go back to what that one NATO general said, right? The purpose of NATO is to keep Russia out of Europe, not just militarily, but economically, right? Keep the U.S. in Europe, because all of these countries are vassal states now of the U.S. empire, and to keep Germany down, and that's what they've managed to do. And so we'll see what happens. Again, you can't predict the future, but I just don't see with the immigration crisis that they have there, with the changing demographics. Do I think that all of these military-age men that are supposed refugees from sub-Saharan Africa and the Middle East that are pouring into Italy and France are going to go along with Klaus Schwab lockdowns? It's not if you want to see what insurrections are going to look like, watch Europe over the next years. It's going to be very ugly there in Western Europe. What happens in my prediction, especially as the economies continue to contract, the pie is getting smaller, and people are it just needs something. These populations are very, very upset because they feel entitled. I was watching a video the other day. There was a gal from the Congo in Italy, and she said, I'm here in Italy, and the problem is there's too many Italians. Well, that's going to cause a problem eventually. So we'll see. We'll see how that plays out. But going back to this, nuclear has a lot more to go. And, like look at what Poland's doing, for example. I mean, they virtually have no nuclear. They're going whole hog into it, right? Which is another economy that I would take a look at that's very cheap when I talk about emerging markets and things like that. But anyways, matter of fact, Poland will be in a position, I think, over the next 10 to 20 years to really, supplant Germany as, a big factor inside Europe. So, we talked about, everybody knows what's happening with the Houthis launching missiles at ships in the Red Sea, the Suez Canal. As you come from the Middle East or Asia, you don't go around to Africa, you go up through the Red Sea, between where that peninsula where Saudi Arabia, Yemen, and Oman is, and then Africa is on the other side. And then you go through the Suez Canal, and then you're right there in the Mediterranean and have access to those ports there, and go through Gibraltar and head to Northern Europe, right? So that's kind of been shut down. We've seen many, many shipping companies, tanker companies now rerouting vessels. And this is part of the age of chaos that I've talked about, okay? And we're now seeing that the U.S. really isn't the policeman of the world. It can't really dictate any. It's having a. I'm not saying it won't be able to do it. It's having a very difficult time, and people are watching it. They're looking at it. So let's get back to what that really means. I mean, here's the shipping index. Look at how it's just basically blasted higher since these issues have taken place. And, that's, why is that? Well, you only have a limited amount of ships, right? And everything's done very efficiently to go as fast as it can to the easiest places to go in order to take advantage of, people want things cheap and fast. And so now if you have to reroute ships around the Horn of Africa and go all the way up, like your Vasco da Gama or something, I mean, you add more days of travel time, right? Ton miles, they're called in shipping. So if you have a limited amount of ships, but you increase the ton miles, rates are going to go up because what? Capacity utilization is now being stretched. Because the vessel that I was going to load up is taking 3 weeks or a month longer to travel here from, and so I can't rely on that vessel. And so I have to go find another vessel. And so it starts bidding up, right? It's a supply demand. Remember, we talked about that. I've talked about in the past that my view was that the next bull market in real assets was not necessarily going to be driven by demand, but lack of supply. And this is another manifestation. If everything is priced and balanced, right, with a certain amount of vessels, and there is not a lot of vessels coming online, and you hit it with a shock like this and add, whatever percentage of excess demand because of longer shipping times, then obviously the price is going to go up. And so, this is going to have the potential the longer it goes on. I don't know how long it will go on. I don't know if the coalition of the stupid will be able to do anything. Again, we got something to follow. But this is all, and what's going to happen if they do start having airstrikes and cruise missile strikes? What does that mean? What is, the Houthis are obviously allies with the Iranians. So what does that mean? Okay. And so does this have the possibility of escalating? This is why all of these things matter and are somewhat interconnected. This is all a manifestation of the what's happening in Gaza and the West Bank. Again, I don't, my personal view is that Israel is a country that exists. How it came into existence, you can argue about how the United States came into existence. We had a policy in the West of a extermination of the Plains Indians by liquidating them in these wars and then putting them in the reservations. And then, we moved west, manifest destiny. It is what it is. This is the history of mankind. I'm not saying it's right or wrong. It's what happened. The state of Israel exists. It's going to defend itself. The United States is helping it, and the Houthis don't like that because fellow Muslims are being killed. So they're doing what they are doing. So this is what can happen. That's why it's the age of chaos. Expect more, not less. So here's dwindling tankers entering the Bab al-Mandab Strait. This is going through basically the Red Sea and the Suez Canal. You see what's happening. It's plunging, right? Because this is daily tanker entry. So we own tanker stocks in the portfolio. They're going to have really good Q1 2024 if this continues, because rates are going up. It's just that simple. Because there's we already had I wouldn't say a shortage, but we didn't have enough tankers, right? And we didn't. You're adding ton miles. You're adding extra days at sea for a voyage that takes much longer than it did, a month ago or 2 months ago. And so you're not going to be able to build a bunch of tankers in the next day or two, or the next month, or the next quarter or two. So if this continues or gets worse, then the vessels have to make longer transits, and that's higher rates. And that's being manifested here. Shipping costs climbing. Here's tanker rates. This is Suez max freight for Middle East to Mediterranean. That's because they're not going through just exactly what I talked about. They're not going through the Suez Canal anymore, the Red Sea, and so rates have shot up. Here's this is a clean tanker route. This is a Middle East Gulf to UK Sea. This is a long range freight, clean tanker probably, and you see they're going ballistic. So that's what happens. And so does that those costs get passed on? So does that play in over time? This is the type of things. Maybe not this one thing is going to affect inflation, but I think we're in World War III, whether we want to acknowledge it or not, with the U.S. empire fighting, the emerging uh, East and South, and the BRICS, if you will. So um, there's that conflict that's going on, right? Russia, China, we're enemies with them. I don't know why, but we are. Well, I know why, but I'm not. It's global domination, right? The great game. But this all plays into this. So you're not going to be able to fix it. There's nothing we can do as listeners, people listening. It is what it is. Okay. So you look at it and say, okay, this is what's happening. If I was king for a day, I would fix all this stuff, but I'm not. So what do? I said, well, I have to take care of people. I have things that, I need to concentrate on. People are relying on me. And so what can I do to uh, take advantage of this, taking advantage of these distortions? If we had a peaceful world and it was, perfect Shangri-La, which it never has and never will be, then that would be different. But that's not the case. And so this is what we focus on. And I'm not saying you should run out and buy tankers. I'm just saying we already own them and we're getting the benefit. I'd rather be lucky than good, but we're getting the benefit of something that we bought anyways that was already doing well and was cheap. And this is just exacerbating our potential returns. So this is another guy I follow on Twitter. You should follow him when you curate your uh, FinTwit who you follow. Tony Greer, I kind of like his stuff. He says nobody is prepared for metals and mining stocks to lead the S&P for months, but get ready for it. XME just rallied 10% in the last week and is about to go parabolic. So I said, well, I haven't really been paying attention to the metals and mining sector overall, just a few there like copper and gold. But let's take a look at the XME. So this is from stock charts. This is a daily chart, and so this only goes back like a year. So you can see it has rallied significantly, right? But you're like, okay, what's that mean? I mean, it's jumped up. It's a little bit overbought here. What's it telling us, right? What's going on? And so I busted it out on the weekly chart, which goes back to like 2019, and you could see that even in this so-called weaker economic environment around the world, um, metals and mining really hasn't fallen off like you would see like in a recession. Like this is right after the pandemic. When the world shut down, you saw what happened. But since then, this has been kind of like in a bull market, right? And this is pretty good. We have the 50-week trading above the 200-week moving average, and we haven't broken to a new high yet, but it's worth watching because this is what I was talking about earlier in the presentation. Are some of these sectors or stocks or whatever, what have you, are they telling us that, this is really, if you go back and look about, this is really the time frame when a lot of the central banks, it was shifting from this period in here was shifting from more banks tightening around the world. Now more banks are cutting rates. And so as we see more liquidity enter the markets, we should see economies accelerate. We should see more money in circulation, which should raise prices over time, right? Inflation is a monetary phenomenon. So anyway, I'm reaching a little bit here with some of my conclusions, but it bears. Let me say this: let's bears watching. If this breaks above over the next weeks or so, then that's telling you something, okay? And it's worth watching. But I was shocked that I didn't really think, this thing's been basically in a slow uptrend, lower lows and lower highs for basically, since 2022, right? And 2 years. And so I mean, you were coming out of the pandemic, obviously. This was the recovery out of that, but then we had this little blow off top. This was during the when war in Russia started. Then it kind of pulled back, and then we just kind of been inching higher. Same thing in energy, right? I mean, we're still around, 78, $80 Brent, right? And now with if you take into consideration what's going on as part of the age of chaos thesis that I have, what happens on that front also. So all this stuff bears watching, and I do think that there's opportunity here. We just need to, I would like to see this actually break out above and make a definitive new high, and then pull back. And I would say, okay, it's time to get long, but it's definitely on the watch list. So there's a few of you guys like me waiting for the credit cycle to come to the U.S. I think that's going to be next year for sure. I know I've been saying I thought it would be this year. But if we do have a hard landing, I think that the U.S. Junk bonds are going to, we're going to have an opportunity there. It looks like opportunities are already developing in Europe. This is U.S. and European triple C spreads. You see that basically, because Europe is in it's really economically weak. I would venture to say a recession, that you're seeing, the spreads blow out in Europe. And so I'm going to have to spend some time. There may be some opportunities there to watch this and see how bad it gets, and then maybe even get involved in some of that. But you see at previous times that we're definitely, in my view, coming into a credit cycle. So again, I mean, U.S. is really doing nothing, right? It's up a little bit, but not like I thought it would be. So we'll have to see. I think next year's the year. But that could just be, me copping out and just saying, well, I'm just going to keep saying that. I don't want to be like a Peter Schiff. People say this is another rule of thumb, being early on something is the same as being wrong, because you have an opportunity cost for money. That's why I do use some technical analysis. That's something I did learn from listening and reading Paul Tudor Jones. I will have these various things I'm watching, but I won't enter the trade. I used to enter them early, okay, and just sit on the money and just sit on it. And in some things like uranium, you eventually get bailed out, but we sat there for 3 years and nothing happened. And so what I did learn from Paul Tudor Jones, reading his stuff, is that you can have that thesis, you can be right, but use the charts to kind of wait for that upturn. Just like we talked about in this metals and mining, the thesis is supply, right? Not enough supply being brought online, the demand from this ESG stuff, all the things that we've talked about. But, why not just wait for this breakout to confirm, all the monetary impetus we should see next year from all these central banks reliquefying the system. And so there's no hurry is what I'm saying. You can sit back and say, okay, well, I think this is going to happen, and this is why, but let me use the charts. I don't like to use straight technical analysis, but use it as a tool to help you confirm and really narrow down. So that way you're not, just sitting, waiting and waiting and waiting, because it's not valuable to sit there like Peter Schiff and say gold's going to go up. He's been saying that ever since he's been forever, and gold's went up. But how many people, you don't want to be the broken clock. Okay. You don't want to be just sitting there waiting and waiting and waiting. Yeah, you might get paid off, but then at some point, if you made that call like a year before and got in, and then you have, a 10 baggers, well, that's impressive. But if you've been sitting there for 20 years, and then you have a 10 bagger, well, what's your annualized return over that time? It's still going to be decent, but it's not going to be the same. And we're trying to really build wealth here. And I think that's just another tool, is using the technical analysis to really confirm a thesis that we may have that's fundamentally based. So here's the GMO forward return forecast. Again, this is going to fluctuate every month, but again, you can see the place to be is in, international and foreign and emerging markets, and they are outperforming, guys. It's just that simple. And there's still many places you can go. I mentioned Poland. Okay, I liked some of the Latin American countries. You've got now Peru, Colombia, Brazil, Chile. They're all cutting rates. I've got the Pakistan ETF on my radar screen. Rates are at like 22% there. They're poised to start cutting rates next year. Egypt. I'm not saying these are going to be like the next economic Singapores, but again, Turkey was a very good performer in the last year or so, in dollar terms even. I think it was up almost 100%, and people would say, well, that's an economic basket case. So some of these things I like to watch because, again, reversion to the mean. So a little political stuff now. Wandering investor, guy that I know, Ladislas Maurice, pretty good guy. I follow him. He's got a lot of good videos. If you're interested in setting up alternative passports, banking arrangements, international real estate, this is the guy to follow. He's really connected. He does a good job explaining things. I just like, watching his videos. They're very informative and pretty impressive about how he goes around and meets these folks and sets things up. And he does a lot of good interviews, has a lot of good contacts. But he sent this out. He travels a lot. I know that. And it says that he put this CNN Travel, he's put, they want you to stay home, to stop traveling, to stop meeting other people so that you just watch their media and have zero exposure to anything else and ultimately believe all their lies. And so that's what we're seeing, right? That's what they want you to do. I mean, Klaus Schwab and these people and the oligarchy. It's not like a Bond villain. I mean, it's very simple. It's just an oligarchy of wealthy people and corporations and and opportunistic politicians, little bed bugs that can't make it in the real world, that ensconce themselves into the EU and get a salary. They're going to stick their finger up and go with the wind. And the bread's buttered. And so the oligarchy there wants to hold on to power and richer. And the way to do it is they feel is to lock everything down and control everything, right? And rent, you know the whole story. And so, this is stupid. I don't think it'll work. I think it's doomed to failure because I think the EU's on the way out. So they've bet their horse. Now they're trying to do this globally. It doesn't work. Look at COP28. It was stupid. And it wasn't going, nothing came out of it. Some weak, chilly statement that it's not enforceable and nobody in the global east or south is going to actually do. And so, the CNN Travel, it's time to limit how often we can travel abroad. Carbon passports may be the answer. Okay, fine. Lock Western, no one cares. Okay. I'll give you an example. I have a stock in the portfolio. Okay, it's a company that basically was created by a very wealthy person in Canada. That's an Indian national that emigrated to Canada. He's a billionaire, and he created this investment vehicle to invest in India. And they got into a lot of special deals. And one of the deals they got into is they bought a majority stake in the third largest airport in India. And they just recently completed an expansion. And you look at air travel, how it's recovered after the pandemic there, I like those type of investments. For example, let me give you an example. It doesn't matter what happens in the United States. I mean, the United States is not going to have carbon passports. I just don't see it happening. The EU, it doesn't really matter what they do at this point. They're kind of irrelevant. What's relevant is what's happening in the global south and east. And let me give you an example. Right now in India, with 1.4 billion people, okay, there's only like 800 or 700 aircraft in the entire passenger aircraft in the entire country. You're like, well, that seems like a lot. 700 aircraft in the entire country for 1.4 billion people, with a group of people with an emerging middle class that's larger than the population of the US, okay? That wants to travel, that's getting wealthier over time, wants to use air travel. If you look at the United States, okay, Southwest Airlines, everybody flies on Southwest Southwest Airlines by itself has 800 aircraft. Okay, so we have Southwest Airlines has 800. India has 700 for the entire country for a population that's 3 or 4 times larger than the United States. The Indian aviation industry has over 1,100 passenger aircraft on order with Airbus and Boeing right now. So you see the point? It doesn't matter what Europe does. If the molecules don't get burned there, they're going to get burned in India, China, Indonesia, but I can go on. okay? Because these people are not going to, have a mandate, make their people wealthier. You need energy inputs. And so this is interesting to watch because of the self-immolation of the West as it hates itself, as it imports replacement populations to replace itself, as it doesn't reproduce itself. And it's shameful. It's sad, but that's what's happening. But, people in India and China, they don't care. That's, if you don't want to burn the molecules, they'll burn them. That's what's happening. That's what will continue to happen. And that's the opportunity. And so there you go. That's how I look at it. Unbiased. Okay. They have these ridiculous meetings. Everybody flies over there. This grifting gigolo John Kerry, who wouldn't be anything. This guy was sleeping on couches when he was in the Senate. He was couch surfing. He's such a loser until he married the ketchup money. He got in on the he married that Heinz widow, and she didn't create the company either. She came from, she was born in Mozambique to Portuguese aristocracy that was running that place during colonial times. I mean, so if you really look at these people are really, not very impressive to me. No one listens to them. No one cares what they say. Okay. And so, yes, they're going to try to do their little oligarchies and, pen everybody up in these 50-minute cities. Okay. Well, it's not, you don't want to have air travel in Western Europe or like in France. They've banned city to city air travel, I guess, if there's a train going there. That's fine. You won't burn the fuel there. That jet fuel just gets burned somewhere else. It's not a problem. And and so people are only going to put up with this for so much longer. And these populations that you're importing from sub-Saharan Africa and these Middle Eastern countries, they're not going to put up with it. I mean, I got news for you. They're not going to put up with it. So I think we're cruising for a bruising, and we'll see what happens. But again, I think the age of chaos continues. I think that, acknowledging that fact, maybe I've dramatized it a little bit too much, but there is no Pax Americana. There's not going to be, it's not going to be like, easy sledding. It's going to be a lot of weird, wild stuff happening. Again, I asked the question, what happens when Russia imposes terms on Ukraine, which is eventually going to happen? What does that do? What's the prestige of when NATO's shown to be a paper tiger? What's going to happen? What happens to the EU? As Germany deindustrializes, it's the locomotive that pulls the entire EU. What's everybody else do? What happens when all these people that you imported, millions and millions of them, continue to do? Okay, when they don't have their aspirations or their expectations fulfilled? Well, it's probably not going to end well. And I don't see that being a place where I really want to put a lot of money, especially with this kind of nonsense. So we'll see what happens. Again, hate to end because this is the Christmas season and the celebration of the birth of Christ, to end on a sour note, but it is what it is. And this is the Actionable Intelligence Alert, and we bring it to you the way that we think it is. All right, guys, that's it for this week. Appreciate, again, the support. We're going to continue to do this as long as we can. This has been very successful, and we'll continue to bring you the news and bring you hopefully good market and picks, and we'll see what happens in 2024. Talk to you later.